if you receive Social Security benefits. Your check is going up in 2026. The government just confirmed it. A 2.8% cost of living adjustment. Starting in January. Now, before you get too excited or too disappointed, I want to walk you through exactly what this means for your actual paycheck. Because the headline number and the amount that hits your bank account are two very different things. By the end of this video, you'll know exactly how much more you're getting, what's quietly eating into that raise, and 3 moves you can make right now to protect your retirement income. Let's get into it.
The Benefits Desk.
Let's start with the basics, because a lot of people have never had this explained to them clearly. A cost of living adjustment, or COLA, is the annual raise that Social Security gives its beneficiaries to try to keep up with inflation. In other words, as everyday prices go up, the government adjusts your benefit, so your money doesn't lose its buying power. The COLA is based on something called the Consumer Price Index for urban wage earners, a government measure of how much common goods and services cost throughout the year. If that index goes up, your benefit goes up by roughly the same percentage. For 2026, that number came in at 2.8%. That's slightly higher than last year's 2.5% adjustment, and it reflects moderate, steady inflation, not the dramatic price spikes we saw back in 2022 and 2023. To put it in perspective, over the last decade, the average annual COLA has been about 3.1%. So 2.8% is right in that normal range. This isn't a windfall, but it's not nothing, either.
The Benefits Desk.
Alright, let's talk real numbers. Because that's what you're actually here for. According to the Social Security Administration, the average retired worker will see their monthly check increase by about $56. That takes the average from roughly $2,015 a month in 2025 to about $2,071 in 2026. If you're a married couple, where both of you receive benefits, you're looking at an average increase of about $88 per month, bringing a typical couple's combined check from around $3,120 to roughly $3,208. Now, your personal increase will depend on your own benefit amount. So, here's a quick way to calculate it yourself. Take whatever your current monthly benefit is and multiply it by 1.028. That's your new 2026 amount, before deductions.
The Benefits Desk.
Now here's the part most news headlines skip over. And this is probably the most important thing in this entire video. If you're on Medicare, and most Social Security recipients over 65 are, your Part B premium is automatically deducted from your monthly benefit. And in 2026, that premium went up. Medicare Part B premiums increased to $201.90 per month in 2026, up from $185 in 2025. That's a jump of about $17.90 per month. So if the average raise is $56, and the Medicare Part B increase takes back almost 18 of those dollars, the average retiree is left with a net increase of just about $38 per month. The Medicare increase is quietly consuming nearly a third of the COLA raise. That's not a reason to panic, but it is a reason to plan. And it's something the Social Security Administration notice, mailed to your house, won't spell out in plain English for you. Important note: your individual net increase depends on your current benefit amount and exact Medicare premium. There's also the question of taxes. Depending on your total income and retirement, up to 85% of your Social Security benefit may still be subject to federal income tax. But here's some good news on that front. Thanks to legislation passed in mid-2025, Americans who are 65 or older can now claim up to an additional $6,000 in tax deductions on their federal return. For many retirees, this could significantly offset or even eliminate the taxes you'd owe on your Social Security income. This is brand new, and most people don't know it exists yet. Beyond the COLA, 2026 brings several other Social Security changes worth knowing. Let me walk through the main ones quickly. 1. Full retirement age reaches 67. If you were born in 1960 or later, your full retirement age is now officially 67. This is the age at which you can claim 100% of your earned benefit. Claiming earlier reduces it permanently, claiming later, up to 70 years old, increases it by 8% per year. 2. Taxable wage base rises to $184,500. This only affects workers still paying into the system. The maximum amount of earnings, subject to Social Security tax, increased to $184,500 in 2026, up from $176,100 in 2025. 3. Earnings limit, increased to $24,480. If you're collecting Social Security before your full retirement age and are still working, you can now earn up to $24,480 per year without any benefit reduction. Beyond that, $1 is withheld for every $2 earned. Once you reach your full retirement age, there is no earnings limit at all. 4. SSI maximum payment goes up. If you receive supplemental security income, the maximum individual monthly payment increases to $994 in 2026, up from $967. For eligible couples, it rises to $1,491. 5. Credits now cost more to earn. You'll need to earn at least $1,890 to receive one Social Security work credit in 2026, up from $1,810 last year. You still need 4 credits per year, requiring earnings of at least $7,560 annually to maintain your benefit building record.
The benefits desk.
Before I let you go, here are 3 things you can actually do this week to make the most of the 2026 changes. Move number 1. Verify your new benefit amount online. Don't wait for the paper notice to arrive in December. Log into your free My Social Security account at ssa.gov and check your COLA notice in the message center. It will show your exact new benefit for 2026, including what's been deducted for Medicare. If you don't have an account yet, create one. It's free and takes about 10 minutes. Move number 2. Check your Medicare Part B situation. If you're not yet enrolled in Medicare but you're turning 65, make sure you understand your enrollment window. Missing it can result in a permanent late enrollment penalty added to your premium for life. Move number 3. Talk to a tax professional about the new $6,000 deduction. The new senior tax deduction is real money. If you're 65 or older, make sure your tax preparer knows about the additional $6,000 deduction available in 2026. If you do your own taxes, look for this new line item when you file. It could meaningfully reduce or eliminate any taxes owed on your Social Security income. Let's do a quick recap of everything we covered today. First, the 2026 COLA is 2.8% for 2026, slightly higher than last year's 2.5%. Second, the average retiree gets about $56 more a month. Third, the Medicare Part B increase of about $17.90 eats into that net gain, which brings it closer to about $38 a month. Fourth, the new $6,000 senior tax deduction could offset Social Security income taxes. Fifth, the full retirement age is now 67, for those born in 1960 or later. Sixth, remember to log into ssa.gov to see your exact new benefit today. Social Security can feel confusing, and that's honestly by design. These systems weren't built to be easy to understand. But that's exactly why this channel exists. Every week, we break down benefits, Medicare, retirement finances, and everything in between. In plain English, no jargon. If this video helped you, hit subscribe so you don't miss our next video. And if you know someone who's on Social Security or will be soon, share this with them. It might be the most useful minutes they spend this week. I've also put a link to a COLA calculator worksheet in the description. Plug in your current benefit, and it'll show you your exact 2026 numbers, including the Medicare deduction. And remember, like, subscribe, and hit that bell button so you get notified when we upload more content.